This is the daily Forex trading outlook update for August 15th, 2014. Jay Meisler here. I'm doing this the night before because Fridays, especially in August, and especially in this current market, which is very thin, will be even thinner. So we can get a heads up of what's going on. And before I even do that, I want to discuss one thing. If you look at Thursday's price action, the euro rallied early on, and what happened was Putin made some conciliatory comments and market reacted, but it didn't last long, similar to Wednesday, and the euro's come back down. It's unable to hold above 134. We've been going between 133.33 and 134.85 for 18 days now. And that's no wonder the 20-day moving average is now up to 134.18, which is a key level on top. And as long as we stay below it, as I've been saying, market will trade bearish. Now, one thing about the consolidation, it's just the way it's been. I wrote an article, why isn't the euro at 130? I'll put a link to it at the end of this video, and I suggest you look at it. Now, as far as what Putin said today, and this is the point I want to get to, and why I'm taking time the night before to go through this rather than just going through all the charts. I'll do that in a second. Is that the weakness is more fundamental. It's more than just geopolitics in Ukraine. There's a lot of other factors. When you read the article I wrote, you'll understand what they are. So when the market tries to rally on Ukraine, it's going to be short-lived and overselling opportunity unless we take out technical levels. We saw it again on Thursday, and just keep that in mind because the euro is down for other reasons, especially the ECB wants it lower. The only thing keeping it up is the fact the market is very short. So that's where we stand. You look at the daily charts. I said that the 20-day moving average is now within the market's range. If you go into the 4-hour chart, this is the 100-period moving average. We've nicked it 2 days in a row, but we have not had a 4-hour close above it, and thus you continue keeping that in mind. As long as we stay below it and don't close above it, any 4-hour bar, market will also stay bearish. If you look at the 1-hour chart, which is interesting, we've been making lower highs. And this one, by the way, was our R1, dead on at 134.08, 15 here, 32 here. And if you go up here, which is off this chart, it's 134.45 on the downside. We've also been having higher lows, or really lows, I guess higher lows. We had the 35, 33, 35, 37, 35. Then we had 40, I think 42 and 48. But that's why we've had this compressing range. You can see the 100 and 200 hour moving averages have compressed. So we're on to a Friday. You got not much in the way of data, a couple of U.S. data points, UK GDP, and probably most important thing will be Canada, where they're going to restate last week's employment numbers. And why that's important is, they assume they're going to be revised up, but it could be a surprise. And market expects it, so maybe that's an opportunity. If Canada dips too far, market might come in and buy it. So just that might be an event to watch. Otherwise, we're into here. We'll discuss next week. Next week, when Yellen speaks, the end of the week, that is going to be the key focus in the week after. But for Friday here, the market probably will trade a range. But if we stay below 134, and we've only had 3 highs below 134 in these last 18 days. Then the market will stay bearish. Eventually 133.33 will probably break. Only move above that 20-day moving average would change my view, but we've had 18 days really of mostly consolidation. So that's it for Friday. For those still trading, keep that in mind. Here's the article I told you about. The link is embedded. Just click on it. Good luck and good trading. But overall, the trend is down. And when you read this article, you'll understand my view, which I've been espousing for some time. And that's it for now. So look, good luck, good trading. We'll touch base again during the day on Friday.